Okay, I'm recording now. Okay. So this is the order of hold on. I really not play. Okay. Yeah. Yeah, this is the order of importance I do. Order of importance. One is structure first. Structure, price action, technicals, and indicators. This one is optional. Okay. You dey follow me, bro? Can you follow me? You're here?
I'm here. Can you hear me?
Yeah, I can hear you. I was asking if you dey follow me. So,
Yeah, I follow.
all right. So the major thing I go with is structure first, so that I'll understand what point I'm in the market. So once I understand that, okay, overall on this monthly it's bearish, then I go with the next thing, price action. Price action is showing that there has been 2 months of bullish action, which is if I'm going down to lower time frame, I want to take more buys than sells. And on the weekly, I don't see exhaustion going on the low like this. That alone tells me that okay, it be like the buyers are still heavy in this market because all these weeks under shows exhaustion, sellers exhaustion. So I feel still go back down to the daily and I'll look for how structured they paint. So based off of here on this daily, there is one kind of higher low here. There is another kind of higher low here. This whole level for this point has failed to break. Because if you look well, you'll see the week below, another week below, another week below, another week below. So it tells me that price action wise, there is higher lows painting on these weeks like this. So it means the buyers are coming into the market. So looking at it like this, you don't see a point on this H4 that is failing to break. Now, we no go forget, say, overall, it's a bearish move, and there is some sort of transition from an up to a down move. But still on still, while this point no gree break, we fit take certain buys. And this one now, this is GBP AUD, they move anyhow. So we can just box this off like this and have this point like this and see how the market will react when it gets to this point. So you dig. Also, I use trend lines and counter trend lines to help me navigate which part of the market I did. So right now, this market for up here, they give some type of lower highs. So I can draw a trend line like this. And draw a trend line like this or like this to help me navigate if price is trading below or price is trading above it. Say they follow me. Are you there?
Can you hear me?
Yeah, I can hear you.
I'm here.
You're okay, you they follow
I'm
me.
following you, bro.
Okay, they. Um, so this is me just doing top-down analysis, but it goes extensive it's more than waiting at the do. I just try brush them for you on a clear chart, on a clean chart like that. So I focus on those main things I tell you: structure, price action, and technicals. The technicals are these trend lines I draw, counter trend lines, just to help me navigate what the market is doing. Then I try to understand um, if the market is giving higher lows or lower highs, lower lows or lower highs, higher lows, higher highs, or if it's just ranging between highs and lows, then I'll follow them accordingly like that. Hold on, Adikon. Just hold on a bit. Let me add this to my watch list so I can easily come back to it. Okay, let me just check some of these things really up here. Today is Thursday, 2:30. This is almost
So,
it.
okay, so this one you're expecting it to break that trend line to the downside, right?
Yeah,
So you
yeah.
can enter again.
No, not enter. I already have my entry up here. The only time I'll look to enter again if I see markets don't break this low here. Now, if I see market break this low, then I'll just wait for another retest of it. Then I can scale in and push the market lower. I know today jump, enter trades like that. One trade per scaling in. So I can just pack all my, if I'm supposed to have a complete, let's say 1 lot, 2 lots, 3 lots, 5 lots, if I'm supposed to have like 5 entries, I can just put only one 5 lot and allow it give me more equity. When it gives me more equity, then I can scale in with like three lots, 2 lots, or 1 lot more as time they go. So I know if we just enter, then wait for break, enter again. So I enter here. By the time it gets here, that would be like 100 points already, and that gives me give or take $1,000 already floating. So if I'm risking another 3 lots, I'm not risking too much. I hope you understand. I'll only be risking the profit I have. Like this, for example, now. Like this, for example, why I added another position was because I entered here. From here to here, that's 25, give or take 25 pips or 20 pips. Was already floating 20 pips. And I had a break of one level here on this lower time frame. I had a break of this level here, a break of this level, a break of this level, a new higher low. Um, that's why I took it. And this level was failing to break. Look at it. We had this level here. We had a level here. If you go on 15 minutes, you see clearly. Was failing to break. Then there's another level here. It's all exhaustion, rejection, transition from something to another thing. Then I later found out that this support here was failing to break. This one here. So I do top down. I go from everywhere to everywhere. Nowhere is left untouched. So looking at it from here, we had one level that broke like this. It broke, then I had a pattern I was looking out for. So that pattern is me seeing higher lows on candlesticks, higher lows, and the market failing to break. So you have a bullish, bearish, and a bullish candle. That's why I entered. So basically, that's just it.
And so one of those videos they did, he said something about bullish, bearish, and all of that. And
It's either what I teach normally is this. It takes two candles to break a level. One candle does not break a level. All right. You need one candle to close beyond that level and another follow through candle just to tell you that it's not a fluke. That place no be false breakout. So for example, fuck, I don't clear that chat. I had it for there, but I don't clear the chat. So what I mean by that is, let's say this is a support. We have one bearish candle. If we have one bearish candle on a support, yeah, my network done the trash again. If you have one bearish candle on a support, breaking that support, breaking beyond that support, you want another bearish candle closing beyond that support again for you to have that follow through to say that that support is broken. If you have a bearish candle at a support, then you now have a bullish candle. That's what people call fake out or manipulation or whatever they want to tell themselves. But I just see this as a break, and this is not a break. So if I'm looking at this level like this, I need one candle, two candles to break. Then I say, oh, okay, that point has broken. Then I want a retest of that point that has been broken. So the market can do this. After it breaks after this two candle break, the market can still go down, but I want it to come back to that point that it had broken for a retest to give me a point of structure for me to continue pushing the market lower. But if that level does not break and it gives me a testing candle, then all I want to see is the market pushing in that opposite direction. Did you get that?
Yeah. So this AUD/USD,
Yes.
it broke a structure or the resistance held or what?
Now, it broke this resistance. This point is not seen as a point of structure, though. How they break the market down? There's a difference between resistance and structure. They look the same, but there is a slight difference between resistance and a point of structure, either support or resistance, demand or supply, and a point of structure, which is higher low or lower high. So you can have a resistance, and that resistance will not be a point of structure. Let me break that down to you. Say we draw fib like this from low to high. Okay? If I see the market bouncing from 23.6, okay, we can see the market go up here, but it did not touch 38.2. So 38.2 is my first point of how do I put it? Is my first point of structure. But if there is no candle closing on 38.2, there is just a spike to 38.2, but the closed volume is on 23.6s, then that point is not a point of structure, it is a point of resistance. All right, so say this, we have PRZ levels, Abi. You know PRZ, price reversal zones, yes?
Oh, really? Oh,
Yeah, 38.2 to 100% is known as PRZ. So a market can be trending like this. The market can be trending like this. Yeah. And you have your Fibonacci from low to high. It means the market can still come 100% and still maintain structure for a bullish push. The only way it becomes a break of structure is when the 100% is broken. Then we now expect the market to give a lower high for a continuation to the downside. So anything between 0% and 23.6 is seen as a continuation pattern. The market will be, the market has enough strong momentum. Why motivation become my head? Enough strong momentum to push, to continue the push back up. So it's seen as a continuation pattern. But if the market goes to PRZ levels, we can still see the market come 100% before pushing back up. So this is another example. You can have the market do this. But still be bullish because the most recent higher low has not been broken. The initial higher low has not been broken. So what it looks like is just this. But the moment the most recent lower high gets taken out, then you get a point of breaking structure for a pushback down. So what it looks like is this. We have this. We have this and a break. So as long as this point here is a PRZ level, when I mean PRZ, it's either 38.2, 50%, 61, or from 38.2 to 100%. As long as this point is a PRZ level, you can still be a buy unless the market breaks that PRZ. But if it's not a PRZ and it goes from 23.6, push back up, then this point is now a point of support. It is not a point of structure. So the market can come back to it. When the market comes back to it, it becomes a point of structure because now you now have a Fibonacci from low to high. So it is now a point of structure, which is 61.8. But before, it was not a point of structure as it was only 23.6. Are you following me? I'll be too advanced for you. If you're advanced for you, just let me know. I can break it down for you guys. We did together.
try break them down again.
Okay, so let me clear everything down. What's your understanding of structure, though?
I kind of mostly just go with price action and the rest, and I support my buyers with fundamentals. Do you use fundamentals at all?
Yeah, I do. Okay,
I
so
just
let's go
and
back to the basics, shall we? Can we go back to the basics and see how we push, how we fare? Hold on, let me secure these trades. I'm already floating in profit. I have to share these with my students at the come back. Just stay on the line at the come. I'll just rush share this thing with my students. Almost. Are you in that my Telegram channel?
Oh no, not there. I'm only on the YouTube page.
Is it?
No, only the YouTube I did. Both
Oh,
the
okay. You
Telegram.
just
Okay.
subscribe to the YouTube. Okay. Oh no. Oh no, still the same thing, man. I just need enough support for people to just they follow my chat breakdown. I've been they do them somewhere else, but I just started to do for myself. Okay.
She, I feel join you on the chat breakdown, bro. Is it possible?
It's just normal free Telegram channel. Nothing really they go on there. Now me, it just has me just posting my chat breakdown. So, but if you are on the you know what way, the YouTube already, no yawa. But I would prefer you also there in the
No.
Telegram. It will help you to know what's in the up. Sometimes, like last week, I held a free webinar with everybody. So that one, I uploaded the class on YouTube, Shabo. All is well. Let me secure this trade.
Let me join.
Yeah, it's on my snap though. Uh, just give me a few seconds. I need to before this market start the do any
Take a day.
You say
You dey take a day on the average.
what? Oh, trades. I only take give or take. I only trade three instruments. I only trade three instruments. So give or take, I might have three three entries, 3 to 6 entries a day.
Give me three instruments.
USDC.
FX, crypto, and
Nah, FX and indices, US 30.
okay, okay, and crypto, huh?
I don't trade cryptos actively though, that's the thing. I don't trade cryptos actively. I trade them once in a while.
You take 3 to 6 trades a day.
Yeah. So I might take three in the morning, like this morning now. I don't take USD CHF, AED USD, and US 30. Then New York, I might take another one, depending on if I see setups.
The New York session, you start a whole different
No,
analysis,
no,
or
no.
you
Same,
continue.
same analysis. Same analysis, just another. Okay, take for example this now. This point is yet to break on the 15 and is yet to break on the 30. It might take till New York for it to break. New York will come back to retest that level. When it comes back to retest it during New York, that's where I have my second entries. Do you get?
Stuff is the yeah, I understand. So this stuff is due counter trend line and trend line and
Yeah,
everything.
so
So
the
since
so we have the major trend line, which is what I call the trend line, and we have the counter trend line. The counter trend line tells me that okay, the retracement is done, so it's time to enter for the major move.
again, yeah. So another thing I wanted to ask is, do you risk different amount of money when when you are going against the trend and when you are going with the trend?
Yes.
Do you differentiate? Okay.
So see the thing. I won't form fake work, say I they do money management and whatnot. I take trades. Sometimes I they chop most times I they chop L. Sometimes I know they chop L. The L where I know they chop, they cover for the L's where they chop. So if I'm counter trend trading, I take the same lot, but I just don't forget that I am counter trend trading. I just don't forget that okay, man, not go lose focus. Um, say the overall move. Example is this. Example is this that we're analyzing. You see the overall move is bullish, yes? You dey see am back? Me taking these sales is me going against the trend. I am counter trend trading. That is why I don't have my take profits down here. I have it here because first, for the market to come down here, this point has to break. Are you following me?
Sure.
You they follow me back?
Hey,
Yeah? Can you hear me?
follow you. I didn't hear you. You didn't hear me
Oh,
at all.
yeah. But I been know your voice, you been no talk out.
I think that this my airport. Make I come out.
Oh yeah, no.
This airport. Can you hear me now?
Yeah, it's clearer now.
Okay. It's the airport. Okay, so you said what point should be broken again, please?
Okay. Um, so right now I am counter trend trading. So it means
Yeah.
that's why I have my take profit here and not down here. It can come down there.
Oh, yeah, sure. Yeah.
It looks likely to get down there because of the daily, because of the weekly, because of the geopolitical tensions, because of the fundamentals coming out from the stock market. It looks likely say it will reach that point. Okay.
Mm,
Technically, we
yeah.
have a level here. You see,
Mm-hmm. Yeah.
technically we have a level there that's got broken based off of these two candles. First, we got one bullish candle and a bearish candle. You see how that point was not broken. You see how the market went back down. But the moment the market did
Yeah.
this, 1, 2, it came back to retest where it broke.
Yeah.
If waiting our first paint that
Yeah.
first time, it don't they make sense to you? Where I said,
Yeah, sure. Yeah.
yeah, so a break of a point, I want a
The,
retest of that point for it before it continues. Sure you dig. And that is exactly what happened here. We got
yeah.
that 1, 2 break, retest of that point. If you go on lower time frame, you would have seen an entry to take here inside that CPI day. It was the CPI day. Yeah, one of my guy was here with
Oh,
me
yeah.
trading with me, and he saw when I got into this trade as I entered the buy inside here, and I had my stop loss way below here. My stop loss is always on US 30, is always 100 points. 100 points. So you see how the market come touch, it touched my stop loss. But what happened was I closed the trade before it hits my stop loss. So I closed it in a little bit profit. Was this my entry? My entry was down. So I had 100 points way outside of this spike, Ghana said. But I closed the trade in a little bit profit before it spiked. Why I took that trade was because of that two candlestick break, retest of that level and whatnot. So if you remember what I said, structure first, price action, technicals. So I follow the same thing. Structure, there was a break of structure on higher time frame. Price action, price came back to that broken level and started painting higher lows on this time frame. Shade this here.
Yeah, sure.
Started painting higher lows. We got a higher low that failed to break even when the CPI came out. See it, yeah. I hope everything they become a little bit clearer to you.
Yeah, sure. Yeah,
Yeah.
sure. I'm following you for it. I'm following.
Yeah, just guys they ask so that we no go I know lost you. Because it might seem advanced, but if you just understand the basics, I know today complicates my matter. So
Yeah,
so
sure.
that's the same thing. This market can come as low as to that point. Yes, it can. But for now,
Yeah.
the overall move is bullish. So I'll look to take more buys in this market than sells. Yeah, that's why I have my take profit here. And I'm risking on this trade. This trade was a nine peep. If I say 100 points, I mean 10 pips. It's 10 pips in forex. So this trade I took is a 9 pip trade. So the stop loss is 9.8 pips, 9 pip, 8 pipettes, and the take profit is 30 pips, which is 1:3, a good risk to reward ratio.
Yeah.
Yeah, so
Very good.
I know they look for too much nonsense in the market. I just need the market to give me something so I can take losses. Like Monday, Tuesday, this week, I chop now Monday alone, I chop like better L. Yeah. I've not recovered from the L.
Yeah.
Now these trades go give me make back the L and give me more profit. If this one hits take profit and this one hits take profit, I don't make back the L. I feel even don't go day profit for the week.
Okay. So I want to ask, most of your trades now at least 1 to 3 now.
Yes. No, not at least. At least 1:1. But if I see a good potential, I go as far as 1:3, sometimes 1:5. Depends. Like this one now, this trade is 25 pips, stop loss. The take profit is 80 pips, 84 pips. That is 1:3 also. 1:3.5. This one is a 27 pip stop loss. The risk to reward, the TP is 52 pips, which is like 1:2. So I'm not all about that big shit where they do woke type thing. They say 1:3, 1:3, this, 1:that. Nah, man, fuck that. I go as the market, they make market available to me. So you dig. So I know today decried all these woke people. So if the market gives me
what time? What time do you start your analysis? Like the China, like maybe an hour
Wait,
or two or so
hold on,
before,
hold on.
because
This meeting won't end. Just click
okay.
the link again and you will have another recording.
Oh,
Yeah. I know they pay for all this shit.
all right, no, no.